Hey, this is attorney Elizabeth Potts-Weinstein, and today we're going to talk about how to have an LLC and an S corporation at the same time. A common question I get from people is, should I have an LLC or a corporation? Should I have an LLC or an S Corp? How can I turn my LLC and convert it into an S corporation? And the answer is, you can have both an LLC and an S corporation that's exactly the same legal entity business. So how can you do that? How does that even make any sense? Well, the reason is an LLC or limited liability company is the legal structure of the business under the state where you formed it. S corporation is just how that business is taxed. It has nothing to do with the legal entity. You can have many different kinds of businesses, legal entity businesses that are taxed as an S corporation. It's just a thing with the IRS. So you can have your LLC elect to be taxed as an S corporation. Now, why would you want to do that? Why not just set up a corporation that's taxed as an S corporation? Why not just have your LLC taxed as a default, which is a sole proprietorship for one owner or a partnership for multiple owners? Well, let's talk about that. If you have an LLC, the legal structure of an LLC, it is more simple than the legal structure of a corporation. An LLC just doesn't have as many requirements. You don't have to do annual meetings. You don't have to have shareholder meeting minutes. I mean, there's a whole bunch of things that corporations have to do that for a really small business doesn't make any sense logistically. It's just going to be paperwork you forget to do. And so for most people in most situations, an LLC is the best idea for a very small business. Now, an S corporation tax election, being taxed as an S corporation, gives you a bunch of tax planning things that you can do to save money on taxes. The biggest one that impacts the most people is that when your business makes a profit, if it's an LLC tax as a sole proprietorship, for example, you have to pay self-employment tax on all the profit. But if it is an LLC taxed as an S corporation, you don't do it that way. Part of what you pay yourself is a regular paycheck, like you run payroll. And effectively, it's the self-employment tax thing because it's all the regular FICAs and all that stuff that comes out of your paycheck. But you don't have to have all your profits come out to you that way. Some of your profits you can do as just a distribution. In my business, I literally write myself a check at the end of the month, like a regular check, as my monthly distribution from my business that is taxed as an S corporation. That money I have to pay income tax on, but I do not have to pay Social Security, FICA's stuff on it, just income tax. So you can theoretically save a bunch of money each year because you're only paying yourself some of your profits as a paycheck and where it pays all the other taxes and not all of it. There are also some other tax planning things you can do in an S corporation. Getting into that, you'd want to actually talk to your tax preparer to see if it makes sense in your particular situation. I do want to say that if you're taxed as an S corporation, you have to file a different tax return. So if you're an LLC that's taxed as a sole proprietorship, all your business stuff just goes on your regular tax return. It goes in its own schedule, but on your regular tax return. If you have an LLC that's taxed as a then the business files a S corporation tax return. You may not want to do this personally. This isn't a TurboTax kind of thing. This is something where you hire someone to do it. Now, I do my own, but I'm also a lawyer, so I'm probably not a good example for that. You're probably going to want to pay someone to do that. And because of that, and you're also going to run payroll and things, it's going to add to the expense of your business. So if your business only makes $10,000 a year in profits that you're paying yourself, you're probably not going to have any tax savings by being an LLC taxed as an S corporation. But if your business is making $100,000 a year, it may be worth it. So, and then somewhere in between $10,000 and $100,000 a year is where it's going to flip over. And that really depends upon your unique situation for how your business is taxed and how your personal taxes are. So how do you do that? How do you have an LLC that's taxed as an S corporation? First thing you have to do is have an LLC. You form the LLC with the state that you've picked. You get an EIN from the IRS for that LLC, and then you file the S corporation election with the IRS. I'm going to put a link down below in the description that has other videos that I've done on how to do the election and how to form an LLC and all that kind of stuff and how to get the EIN. But the main thing to be aware of is that you have something to do with your state where you get the LLC, and then you also want to get your EIN. And then you file the S corporation election with the IRS. Again, this is attorney Elizabeth Potts Weinstein. If you have any questions about what we talked about today, feel free to ask them below and I'll try to point you in the right direction. Thumbs up for the algorithm and subscribe if you like any more videos like this. Thanks a lot for watching. Bye-bye.